Today, we're going to talk about 3 traps with an FHA loan. First and foremost, we're going to jump right into this with FHA having 2 types of mortgage insurance, one of which is not talked about. I'm going to kind of break them both apart in an example of a $500,000 property and using a 5-year time window so that you can get more educated, along with keeping the door open for when you go to buy that house to make sure you get the best loan. We'll talk about that at the end of this video. The first and foremost one is the one you're probably already aware of. It's the monthly mortgage insurance. On the $500,000 property, that's just under $230 a month. So keep in mind, over 60 months, that's just under $14,000 you'll pay in mortgage insurance. That's part of your payment, but that is not paying down the balance of your loan. The second one is slid into loan estimates, closures, and your final loan amount, and that is the financed upfront mortgage insurance premium. If you put down 3.5% on an FHA loan, you will end up with 1.75% equity because it is financed, and most people are not paying close attention to this, and lenders may not do the best job explaining it to you when you're getting that loan, comparing it, say, to a conventional loan, and why you should do one over the other. Put those two together, and that is going to be over $21,000, $22,000 over the course of that 60 months. It is important for you to know this because it will affect you. Some thoughts are, I'll just refinance into a conventional loan. While that may seem good on the surface, keep in mind that when you go to refinance, there's going to be closing costs. There's going to be that underwriting fee again. There's going to be the appraisal fee if you're going FHA to conventional. There's going to be a credit report fee. There's going to be title fees. There's going to be setting up of the new escrow account. Put this all together, and before you even talk about getting the lowest rate, which would be a separate video that I have here on discount points, should you pay them or should you not, you're already thousands of dollars into closing costs to get out of that FHA into the conventional. Traditionally, those are stacked onto the payoff. So if your payoff was $490 and those closing costs are added, new loan amount maybe $495, $497. Will the savings be there for you at that time? So we have the monthly mortgage insurance, we have the upfront mortgage insurance, and the closing costs if you get out of that FHA loan with refinancing into a conventional loan. Now, there are times when FHA wins, and 3 of those times when it is better to use an FHA would be if you have a lower credit score, because FHA will likely give you the same interest rate as that person with a 780. Person with a 680 is going to get the same interest rate. If you have higher debt ratios, FHA does allow more tolerance for debt ratios if some of those student loans are still there, and increasing your debt ratios, cost of housing, affordability. Additionally, FHA has a earlier entry point for if you had a prior bankruptcy or credit challenges. So what should you do to keep your options open? Well, I would just honestly say everyone has access to their credit scores these days. So keep in mind where you get your credit score from matters. If you're using Credit Karma and you say, oh, my score's a 710, I'm going to challenge that, because the reality is Credit Karma's scores are not accurate. You want to be talking to a lender. They can do a soft pull for you. Why might that matter? If you're saying, Ray, I'm not going to be buying for a year, why does this matter? Because you would have time to do a credit score tune-up. Should you do FHA? Should you do a conventional? Based on those 3 hidden costs up front, that is something to think about. And for those that do end up in FHA, there is a video that I have. It goes through FHA in a couple minutes, and it's a great video for you. So check out the channel for videos like that. What can you do to tune up your credit score? Things like Experian Boost, where it might connect to your bank account and pull payment history. So if you have minimal credit, it might pull payment history from things like your streaming services, other subscriptions and such to bump up your credit score. Another thing you can do, you can ask your credit card company to increase the line of credit limit. I'm not saying go charge up the accounts, guys. And then also learn when to make those payments, because if you pay just a certain amount, but always after the statement cycle ends, you could be shorting what your credit score maximum could be. So to increase your credit scores, learn about how credit scores move, talk to a lender relating to that. Make sure that a lender is cross-comparing FHA versus conventional for you. I have a video on here for that for you to check out. But ask the lender to cross-compare for your situation, which is better, not just from the time at closing for payment, but over 5 to 7 years. It may be FHA, it may be conventional, but get educated so that you end up with the right loan for your family when you buy your home. Some additional tips for you: establish a savings so that you have, I would say, 5%. You can then have more doors open, FHA versus conventional. If you're not able to get to that 5% mark, does it mean you shouldn't buy? No, because there are down payment assistance options that are available. And as we continue into this new frontier with the housing market, what I say it doesn't make sense to buy a home, that's just necessarily not the case. That's for you to decide if you should buy or continue to rent. Having the door open for FHA versus conventional, there are down payment assistance options for conventional loans as well. So have the lender educate you on this. Something not to do: don't switch jobs without consulting a lender. And I know that may sound odd because you may be months and months ahead of even thinking about buying a house. But if you switch jobs and you have variable pay, what does that mean? Bonus, commissions, you are hourly, you have shift differentials, these types of things. How much you qualify for could be impacted. So make sure to talk to the lender about this so that you're properly prepared. It's not to say don't go take that new job, but have somebody in your corner to be your advocate so that you end up with the right loan for you. It's not to say FHA is the wrong way to go, but the more you know, the less you can pay to the lenders, and you can reinvest that into yourself and into your future. Make sure to subscribe to the channel for more videos like this. Thanks so much. We'll talk to you soon.